Let me tell you something. I've been a rich man and I have been a poor man, and I choose rich every fucking time.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Hell of a video last time, eh? The summer top and drop we have been talking about for months on this channel played out with the S&P falling not to the dollar, but to the exact penny of the target I gave you last video. Your average drawdown in the summer for the summer top and drop is 10.5%. You come down to the 618, you're at 8%. You're not even performing at the average. You come down to the 786, look at that, almost exactly 10.5% at 51.20. Hence, that's my target. Now, a lot of people are asking me, how did we know about this, right? How did you know? Great call. I appreciate all those kudos, guys. But guys, this is nothing more than cycles. First of all, I want to show you something because we're going to have a little thought experiment on today's video. I want to show you something. So Lee, let's kick this off with Mark Moss. Throw Mark Moss up there. So lots of people are giving you reasons as to why people are calling this a crash, why this flash crash happened. Okay, why did it happen? Mark Moss, it was a carry trade, right? Let's flip over to Tom Lee. What does Tom Lee say? Tom Lee says it was a growth scare. Let's flip over to Ed Yardeni. This reminds him of 1987 when you had a flash crash, and then what happened? Well, we avoided recession in the economy and the stock market went back up. Let's look at Bill O'Reilly. He does political news. Bill O'Reilly said this was part of the Kamala crash because the market was getting scared of a hard leftist and who just selected a hard leftist as well as her vice president. The market was getting scared. Doesn't want a hard leftist in the marketplace. Market sold off. Let's look at George Gammons. This one's the best. WTF just happened. I love George. So these are all different reasons of what possibly just happened. But then how did we know? How did I know? Do you guys hear me talk about the carry trade? Did you hear me talk about a Kamala crash? Did you hear me talk about a growth scare the last couple of months? No, we've been talking about the summer top and drop because it's a cycle. You see these cycles by studying the charts. Now, the thought experiment I want to do with you guys, let's try to make this relatable. Let's say you're a guy. Lee, you can pretend. Let's say you're a guy and you have a girlfriend or a wife, right? And once a month, she goes down to Wind Down Wednesdays. And for those of you in other countries, I'm Gen X. Growing up in my 20s and 30s, this is a big deal, right? A lot of women like to go out and drink wine. So Wind Down Wednesdays. Once a month, your wife, your girlfriend goes out with her friends, leaves you at home, maybe with the kids, but she ignores your phone calls, goes and hangs out with her friends, comes back, she's feeling really good, and she starts bringing up stuff about 6 weeks ago or 6 months ago when she caught you looking at some girl's skirt or something, right? So she brings all these things up. It causes fights. This happens month after month after month. This becomes a cycle. You begin to dread when she goes out to Wind Down Wednesdays, right? Always causes problems. Let's flip it around for the ladies. For the ladies, your husband, your boyfriend hosts a poker night. He has his friends over. Your husband or your boyfriend becomes obnoxious. He's arrogant. He bosses you around. He shows off to his friends. You begin to dread poker night at your house. This becomes a cycle. Now, the market is aware. The people on TV are aware of cycles. You just hear them use code words. They call it seasonality. How many times have you watched CNBC or Bloomberg and a guest comes on or a host says, well, Bob, we're approaching a seasonally weak time of year. We're approaching a seasonally strong time of year. They always say things like that, but nobody really digs into it. Why is that? And people say it's earnings, it's this, it's that. It's the way the market has always been. In 1928, I have W.D. Gann's original newsletter from 1928. He predicted the crash in 1929 and gave his reasons for it. You guys, if you only take a couple of things away from this channel, especially new subs, understand cardinal points in the market. Spring equinox, fall equinox. We're going to go over it because they're particularly important here, cardinal points in the market and bubble cycles and key turning points in the market. Not every time, but with a high enough chance, high enough probability that you need to pay attention to it. Let's just talk about the GFC. When did the GFC peak? I'm talking about the three weeks before or after these equinox points. GFC peaked October 11th, within 3 weeks of the fall equinox. When did the GFC bottom? Something like March 9th, I think. March 9th, 2009, within 2 weeks of the spring equinox. You need to understand these cardinal points in the market. Same with .com. When did it peak? Spring equinox of 2000 in March. When did it bottom? Fall equinox of 2002 in October. When did the crash in 1987 happen? In September, fall equinox. When did 1929 crash begin? Fall equinox in September. When did COVID play out, right? Or shit, I should say pandemic. This video will probably be shadow banned now. So when did the pandemic start? March, the spring equinox of 2020 is when the market took its biggest leg down. Key turning points, and you are approaching a key turning point now. This is what we want to look at, and you want to look at the previous cycles. The market has moods. Just like your idiot husband, just like your idiot girlfriend or wife, it has moods, and these moods tend to play out over and over again. Because what is the market? It's just a bunch of people buying and selling things. That's all that it is. It's made up of people. That's why sentiment, and I've come to believe this, and this really took me a long time, I'm not going to lie. I would say it took me almost 20 years to really understand it's all about sentiment, which is why the salesmen on TV are so important. It's all about sentiment in this market. You could take any one of these news clips I just showed you, these screenshots we just showed you, and fill in the reason. And guess what? If the market ends up breaking out to an all-time high, like I'm predicting after the first rate cut, if it ends up doing that, you're going to see all these same guys, plus a whole bunch of other guys, give you the reason. The AI trade's back on. Maybe there's peace between Ukraine and Russia, or maybe the market really likes that so-and-so candidate took the lead, right? You're going to have a bunch of different reasons, but you're going to know about it months ahead of time because we have the previous cycles to compare it to. This is a leading edge in the market. This is why I laugh when people have cute little slogans on their TA videos like react, don't predict. If you're always reacting, you're always behind. If you're always using lagging indicators to determine what's happening in the economy, like unemployment, you're always behind. It's the same in trading. You need to know where you are in the space. Patterns are a leading indicator. They give you an edge. There's patterns in the economy. There's patterns in all walks of life, relationships. Everything you do in life has a pattern, and it's applicable to the markets. Guys, in this video, we're going to do a deep dive into the S&P, NASDAQ, and Bitcoin as well. This is your Wednesday market update. If you like these videos, I put out additional videos, additional content on our Discord every single week. So does our staff, and they are fantastic financial freedom seeking members in the Discord. If you guys want to give that a try, all that information is in the video description. You can message Lee in Telegram if you have any problems. And very soon, all of that information will be available on our fully integrated website, where you can just join the website membership if you have no interest in being on a Discord. All right, guys, without further ado, Lee, let's start the show. All right, guys, by the way, if you want to trade these markets, help out this channel, check out the two fantastic exchanges you can trade on. SimpleFX, if you live outside the US, you will absolutely love that exchange. Details in the video description. Bitunix for all the cryptos, no VPN, no KYC. You can use that in just about any country in the world. All those details in the video description. Let's talk about the charts real quick. You guys have seen this every single video, and I'm going to keep showing it until we stop tracking to it where we are. Same exact Fed funds rate, 5.25%. Same exact market peak on the S&P, July 16th, right? The same as in 2024. It's the same back in 2007. We did our retracement. We got our 10.5% target. This was a 12.5% drop, and you're in this chop, and you're going to have ups and downs. Part of the basing process. That first rate cut, September 18th, is when you will get the parabolic rise up here. Look at that big candle, also on the NASDAQ. I'll show it to you. And you see the chart move up to a new all-time high right here, October 11th, 2007. You rallied for 23 days after the first rate cut. That first rate cut, September 18th, the identical first rate cut we're going to get in this cycle. Tracking identical, talking about these macro moves in the marketplace. Let's look at the ES because I want to show you a couple of things here. Couple of things. A lot of people know that watch this channel. I teach a lot of geometric trading concepts. Equidistant waves form signal waves, give you higher points of reversal. This is also known as an ABCD pattern. I'll show you guys this in a second. We had a 15.25% move up off of this April low, okay, the April 19th low. I'm going to show you my targets here. People are asking me about the blow off top targets if we rally for a blow off top. So let's go ahead and take this from the all-time high, fib retracement, down to your corrective low, assuming this low holds, right? Down to your corrective low. Look at your targets. Where are my targets, guys? 5,884 at the 1272. The 1618 is at 6,092. Let's call this 5,900, 6,100, okay? For easier for me to say anyways. Let's delete this. Let's go ahead and get rid of that. So 5,900 to 6,100 is my blow off top targets. Now let's look at something. What would that rise be if this low holds? 5,120. Look at that. To the penny, guys. To the penny for that target. 5,120. If we come up to that 5,900 level, right? 5,900, exactly identical wave, right? 15.25, 15.25. This is what you want to see. You want to see identical waves. These form signal waves in the marketplace. Gives you a higher chance of probability of a turn in the market, but I can do you one better. Let me raise the pot. Let's go back to 2007 really quickly. What was this rise in 2007 off your corrective low to the new all-time high? What was this rise? 15.44%. I mean, guys, you have a freaking roadmap in front of you and nobody on YouTube notices this or talks about it. The exact same Fed funds rate, the exact same top. You got the drop the exact same way. You have a rise that if it completes, will complete the exact same way as it did in 2007 with the exact same rate cut to the day. I mean, it's absolutely amazing. So let's go back. How else can we express this target? We can express this target in the modern market with the trend-based fib. Let's tack here April 19th. Let's tack the high here, the all-time high, and let's tack the base here, the August 5th, that 5120. Look at your 100% move, 5,877. If you want to see this with a pattern, looks nice and pretty. A, B, C, D. This was a Gartley pattern. AB equals CD. And then if you trade Elliott wave, this would be your A equals C. You're looking at this move right here. You see this ratio right here, 7.793. That's the 786. Most people call it a fib. It's not a fib. It's a square root. It's a square root of 618. What's the reciprocal ratio? 1272. 1272 is not a fib. It's the square root of 1618, okay? This is geometric trading here. When you're looking at this, this is your exact reciprocal move right up to that 5,900 level, okay? Right there in that level. So you can see a nice ABCD pattern. You have market history. You have equidistant waves with the blow off top, equidistant waves putting you in this range of 5,900 to 6,100. Nice and pretty. But Brendan, how did you get these dates? Here's the kill box, ladies and gentlemen, between these two targets. How did we get these dates? October 11th as possibly the high, all the way out to October 21st, right? You could say the end of October, doesn't matter. October 11th to October 31st. How did we get these dates? Because the market, going back to 2007, after the first rate cut, let's go ahead and shorten this, rallied for 23 days in the GFC cycle. You rallied for 31 days in the dot-com cycle after the first rate cut. So I think you're going to do the same. This is a small sample size, but I think you're going to rally for 23, 3 weeks to 4 weeks. So that's the range. So that's where I'm getting that top prediction for. And guys, how amazing would this be if it plays out? Does it matter? Does it have to do it for 3 weeks? Could it not rally for 6 weeks? Could it rally for 2 weeks? All those answers are yes. You have the confluence of price and time. If price gets up to this range quicker, I'm going to pay close attention regardless of how quick it got up there to these levels, 5,900, 6,100. If price takes longer to get to these levels, but it's on the right trajectory, I'm still paying close attention. This is where I think the top will be in. And why is this important? I show you this every single video because this is what happens next. This is what happens, Lebowski. This is what happens next. 57% drop, okay? Average bubble drop, 50%. Average recessionary drop, which we are already in. Lee, throw up the Bank of America chart. People don't believe this. Bank of America, Merrill Lynch, my alma mater. Look at when the Somme rule has triggered. Every single time going back to 1953, you have already been in a recession. The average recessionary drop is 33%, and every single recessionary cycle, you take out the cycle low. On the S&P, that's 3,500, guys. Life-changing trades, okay? Life-changing trades. So let's go ahead and move forward, because we're talking about tops here. We have the S&P currently struggling, chopping around. This is going to take place for more time as we get closer to the rate cut. But if you're looking to intraday trade, then you're going to look at your levels, your 382 at 53.50, 54.20 here at the 0.5. Obviously, the 618 with the 50-day moving average, which is at 54.91, is key to watch. At some point, you'll start making some type of pattern, right? You'll make some type of larger pattern on a daily time frame where you start coming up, coming back down, retracing, and you could get your W, you can get targets, you can get intraday targets. We've been talking about this ad nauseum on the Discord, different ways to trade here. Larger pattern movements, you want to see this low hold. You're going to see a lot of chop, a lot of opportunities to trade on smaller time frames, but I'd be looking at these fib retracement levels as key resistance areas. What about the NASDAQ? What did the NASDAQ do in 2007? Well, here's your top, July 19th, 2007. Here's your retracement in 2007. Now, the NASDAQ fell, I think, just about 17% in this cycle. You fell about 12.71% here in the GFC. And then look at the rally. Look at the rally. Here's your Fed rate cut, September 18th. Okay, September 18th rate cut. Very important to note that, because what was this rally off of the low? This is a monster rally, guys. I know a lot of people are talking about lower highs in the market. They think the blow off tops in, and it could very well be. But just looking at the cycles, including the dot-com cycle where price was already falling when the Fed cut rates, you still rallied. You will still rally to that lower high. I believe that rally is going to be to blow off tops. The NASDAQ rallied in the GFC 24.5% off of its retracement low in confluence with that rate cut on September 18th. 24.5%. It peaked November 1st. When did the NASDAQ peak in 2021? It peaked in November with the Russell and with Bitcoin, okay? Key dates to keep in mind as we approach these time frames. And if you look at the NASDAQ on the daily, same exact thing, guys. All the people that were talking about my wave patterns, comparing it to Elliott wave. I don't trade in Elliott wave, guys. I trade in harmonic wave cycles, which happen in cycles of 3 and 5, understanding the W movements, the M movements in the marketplace. And as far as accuracy, I would say that wave 5 played out pretty accurately. Wouldn't you? Look at that. Look at that drop. So we've been talking about this for months, but you got the drop. What was this retracement? Let's check out the retracement. You went deeper than you did in the GFC, okay? So the NASDAQ went deeper. The S&P went shallower. You went 17.31%. Could you still make a new all-time high? I believe you could, right? I believe you could. That's my base case. Could you just come up for a lower high? Yes, but either way, with the rate cut, you're going to rally, okay? 50-day moving average is right at the 618, 19.6. Key area of inflection you want to look for. Maybe that's where you start to make some type of base here, where you pump up, right? Your W pattern, you pump up, you retrace, you come back out. And maybe that's your lower high, although it could just be a pullback and then move up. I'm going to be trading this in confluence with what the S&P does. So when we look at targets for the upside, first of all, we got to zoom out because the NASDAQ, again, hits so many awesome geometric possibilities here. The NASDAQ hit an exact 100%, an exact doubling. Dow theory, over 100 years old, and the market still behaves the same way. The natural doubling in the marketplace, 100%, massive sell-off of 17.3%, okay? But my targets to the upside, and I'll be looking at this in confluence with the S&P, the largest market in the world. I'm looking at 21,971, 23,228. That's where I'm looking, just like on the S&P. Could it go shallower and lower high? Absolutely. Could it take these out? Absolutely. We have the time. We know a range of price. This is what we need to do. This is how you trade with cycles. That rate cut, if we track to .com, if we track to the GFC, again, small sample size, but modern market, these bubbles are only supposed to happen once every 40 to 50 years. We've had two in the last 24 years, this being the third. If we track to those previous cycles and you see how close we're tracking the GFC, it's going to be a bullish event after the rate cut that will fade in 3 to 4 weeks. We want to see where price can get. We know the resistance levels and we know the time frames. Key information, guys. Let's go ahead and jump over to Bitcoin. Bitcoin, man, I caught a lot of flack for Bitcoin. When Bitcoin was up here at 70K, I long predicted, right, for months now, it would return to the 40s. You can go back and look at the comments that people gave me on these videos, okay? So we hit our target. We hit our top target. And what's the pattern I've been talking about for months on Bitcoin? Of course, you have your W pattern, right? Of course, you have your three-wave patterns, your M patterns. We talk about those, but the larger macro pattern here is your three waves to a bottom. Wave one, wave two, wave three, right? This is our harmonic pattern, three waves to a bottom. You can express it with a wave count as well. Here's your one, here's your two, here's your three, harmonic cycle of five. Here is your five, right? So again, understanding wave counts, understanding harmonic cycles is very important in this market. I gave you two sets of targets for months now. I gave you 53K, which we hit not only once, but twice. Obviously, we nosedive. And I gave you the 40s target, okay? The mid 40s target. And where did we get to? Below 50, right at this fractal high. Look at that, 48,986. You hit that perfect fractal high and got a rebound. Could you come back and retest this? Absolutely. Could you put in a new low? Anything's possible, guys. What I'm looking at is the larger macro pattern because I think Bitcoin, being high-tech spec, is going to move up with the S&P, with the NASDAQ. Could it just make a lower high like many are predicting? It's possible. That's not my base case. Everybody else can have their own base case. I think you're going to base, and I think you're going to blow off for a blow off top, okay? So when we talk about targets, I told you where you retrace to matters. I've showed you some projections going out to 110K over the last couple of months. What I want to do here is because we have this broad trading range here. It's a very broad range, over 20,000 points. You have 73. I'm going to pull it down to your new low, okay? Your new low that you made here at 48. You look at this. If you expand, Bitcoin's been expanding at a 200% move. But if you expand, you look at 1272, you have 80,619. 1618, right? That's your harmonic target, 89,239. And the 200% expansion is 98,755. Again, I would like to think, I was telling the guys on the Discord, if we get to 98,755, you could at least get a scam wick to 100K. Hit that key market sentiment of 100K. Now, this is just based off this accumulation zone. If we do base and start to move up, we're going to have a pattern form, whether it's a larger W pattern, right, on a daily time frame, something like this that starts breaking out. We'll be able to get new fib targets based off the patterns that form, okay? But right now, what we have is this trading range, and those are my projections taking you to just about 100K up here at the 200% move. That's my projections for the blow off top. You could stop anywhere between. You could make a lower high. But I think my base case, Bitcoin, high-tech spec, NASDAQ, S&P, all making new all-time highs with the Fed rate cut and Bitcoin being parabolic, usually moving at a 2 beta to the NASDAQ, can easily see these targets hit into the 80s. I would like to see this hit 100K, okay? But again, as we have more candles, we can get more accurate fib projections. Unfortunately, Bitcoin was not around in .com and the GFC cycle, so I can't give you the exact movements and compare it with percentages of what it's done in the past, okay? So what we're doing here is just Fibonacci targets based off of Bitcoin. What you have right now, by the way, just looking at these same Fibonacci, again, you can take the whole range and look at the fib retracements. What you have to be aware of here in Bitcoin, where all your resistance is just a huge cluster of candles that are above you, right? So you're going to look at your 618, you're going to look at your 786. All this is above you. And what I like to do, knowing that this is a 5-wave pattern, I like to go to this last peak right here and pull my fib from this third peak down. Okay, so you pull the fib, come down. You can see where you're finding your resistance. Look at that, right at the 382, right at 57. This is early, guys. It's early. You could see price. Again, this is a daily time frame. Price could come up, could come back down, could retest the bottom, put in a little W, start climbing, start going up in a wedge fashion. Anything can happen, but this is what I think is going to happen as time progresses. Already the salesmen are on TV telling you it's a growth scare. This is nothing to worry about. Base case is soft landing. It's immigration that's causing the unemployment to go up, but actually productivity is even better. You're going to have all these reasons. Like I said, insert the reason. Just understand that come September is a key turning point. It's a pivot point, a cardinal point in the market. And it just so happens to have confluence with the September 18th rate cut. And looking back in history, bullish event, whether for a lower high or a higher high. Guys, that's your video today. Leave me your comments and questions as always. I will answer them. And I look forward to seeing you guys on the next video on Sunday. Check out the Discord. Love to see you guys there. And I'll talk to you guys next one. Take care, everybody. Have a fantastic weekend.